Welcome to episode 88 of Talking Dairy. In recent seasons, farmers have been navigating multiple financial challenges like rapidly increasing and high interest rates, record high input costs, and unexpected drops in forecast milk prices. Farmers have been looking closely at their costs, and with wallets firmly shut on any extra spending, this has been felt across rural businesses and the wider economy in New Zealand. But there might be light at the end of the financial tunnel, with recent improvements in the forecast farm gate milk price and reductions in interest rates. Today we're joined by Mark Storey, who is Head of Economics at DairyNZ, and Mark Speight, a farm systems specialist at DairyNZ, who will give us an update on the latest outlook this season for dairy farmers. They discuss how the recent changes and forecasts in the financial landscape could impact your farm's bottom line in the near future. And before we get started, a disclaimer. The content in this podcast includes general commentary on market trends. It should not be considered as investment advice. Certain transactions, such as those involving futures, options, and high-yield securities, carry significant risks and may not be appropriate for all investors. We advise seeking independent legal or financial guidance before making any investment decisions. Tēnā korua, thanks for joining us today. Let's start by finding out who we're talking to. We'll start with you, Mark Speight. Tell us a little about yourself and how you came to your role at DairyNZ.
Originally, Jack, I'm a sheep and beef farmer from Western Southland. I came into the dairy industry about 20 years ago. Worked for Dexel back in the day, and I've had some roles overseas. And I've returned to DairyNZ in the last 18 months and taken up a position as a farm systems specialist based in the Bay of Plenty, which is a national role. It's a pretty neat role working with farmers to help them improve their farm businesses. Sometimes this is looking at the financial side of their business. Other times it's going through aspects of the farm business like reproductive performance and pasture management. Yeah, I thoroughly enjoy the role, especially working with, obviously, farmers, the team at DairyNZ, and the likes of Mark Storey's economics team.
Thank you, Mark. And Mark Storey, what about yourself?
Thanks, Jack. I've been at DairyNZ coming up to 3 years now. My background is in economics, energy, environment and policy. So I've worked quite a bit for government departments, both in New Zealand and overseas. And a lot of my work has sort of been around the areas of either primary industry or energy policy. So previously I've worked at the Ministry for the Environment. I've worked overseas. I've had quite a long time in Sweden, working for various agencies there, and also was based in France for a while. So about half of my career has actually been offshore. We came back to New Zealand in 2017, and after a stint with government, I saw the light, if you like, and then hopped into DairyNZ a couple of years ago in a role as Head of Economics. And that role is quite a diverse role. In a sense, I lead an economics team and a non-farm data collection team. So the team is the dairy-based team. Collectively, our teams are sort of responsible for the collection of good on-farm data. And then my economics team is one of the teams which basically adds some analysis and insights for that data and turns it back to farmers in terms of benchmarking products, but also tools like the Econ Tracker. And then the other role we have is to basically participate in getting information back to the sector and supporting our research and science projects and policy advocacy.
Thank you very much, Mark. And now, before we go on, do either of you have nicknames? I feel like I've been stitched up today having two Marks.
I think Mark 1 and Mark 2 generally works, but it depends which label you want to put on which one. It doesn't help because even Mark S doesn't get you much closer to the point.
I know. Okay, before we talk about the picture nationally, we're aware that there's adverse weather conditions down south. Mark Speight, you have recently been down in Southland and Otago. Can you describe the sort of spring that farmers down there have had so far this year?
Yeah, Jack, it's probably been one of the toughest springs in Southland and Otago's history. A heck of a lot of rain through the calving period. Actually, last week when I was there, it was the first week that had actually some sunshine for the first time in quite a while. So it's been super tough on farmers being able to manage it. Difficult on all aspects of the farm system, from the people on farm to the pasture to the animals. So low pasture growth rates with the very wet paddocks, and utilisation levels of pasture have often been in the 30 to 40% range. It's been super tough, a really tough spring down south.
Thanks, Mark. Hopefully there'll be something in this discussion today that can help them get through this season as well. Okay, Mark Storey, let's have a look at the outlook for dairy farmers more generally. We've seen some recent improvements, such as Fonterra's higher milk price forecast and a lower official cash rate, or OCR. What could this mean for farmers' overall financial position for this season and for next?
Yeah, thanks, Jack. There's definitely been some good news in the month of September and recently. The two examples that you alluded to, the September announcements by Fonterra, both of the financial situation for the 23-24 season and the final dividend for that season, and the expected payout for the season we're currently in, the 24-25 season, are both positive news stories. There was a special dividend for 23-24 season for Fonterra shareholders of 55 cents per share. And then they increased their forecast for the 24-25 season, the Farmgate milk price, to a midpoint of $9 per kg milk solid. That was on the back of an earlier revision upwards that they had done in August. So going into the season, the Fonterra payout price has increased on two instances. The most recent announcement translates, in terms of what we're forecasting for our revenue for the season, to an average payout price to be $9.18 per kg milk solid. So that's a wee bit different from the Fonterra projection of the payout for milk forecast. On the DairyNZ contractor, we effectively forecast the revenue for the season. So that's sitting at $9.18 per kg milk solid, which is a good revenue in normal times. And that decision by Fonterra alone in September, the revisions around the dividend for the previous season and the payout price, that translates to an extra $640 million in direct revenue for the sector, that particular announcement alone. And that's good news for the sector. Obviously, it's more money coming into dairy farmers, stressing that it's still a forecast. But looking at the wider economy and the flow-on effects of that extra revenue, we would expect that would generate between 1.4 and 1.7 billion in increased economic activity for New Zealand this year. And that just shows that in overall times, which are pretty tough for the New Zealand economy, dairy continues to be a shining light.
Can you explain a little what the break-even milk price is?
Yeah, so break-even milk price is our calculation, or a calculation of the price that farmers need to get to cover their costs. So it's basically looking at any point in time, the total cost which a farmer's facing, and effectively correlates that to a price which would put them into the black, so to speak. That's staying at quite high levels. So in our most recent forecast, the break-even milk price is sitting at $8.15 per kg milk solid. So I referred to average revenue, $9.18, break-even $8.15. That's a positive gap, but it's not a huge gap. And there's still other expenses to come out of farmers' pockets after to take into account as well. That's basically what it's looking at. So it's a positive situation, and it's indicating that this season, if all goes according to forecast, which is a big if, then the average dairy farmer will be getting back into the black in terms of their cash positions. I kind of always should stress, though, that we are talking about forecasts here and looking around the corner. This isn't sitting in farmers' pockets yet. It's positive, but a few things still have to play out this season to see whether we actually get those kind of returns.
So yes, although forecast milk prices are up, input costs are still high. How can farmers strike a balance between investing in inputs to sustainably maximise profit and still keep their cost structures lean?
Well, I'll put it into a little context just where some of the major expense items are, and then Mark can come back and help me answer that second part of the question. Feed and fertiliser expenses are traditionally the two largest operating expense items for farmers. Feed expenses effectively doubled over the period 2014 to 2015, 22, 23, when we were sort of seeing issues around COVID and the energy crisis, etc., and feeding into the economy. While they eased back a bit last season, and we're forecasting that they'll ease back a bit further in the season ahead, they are still at historically high levels. Ditto for fertiliser expenses. They peaked a couple of years ago, but have come back a bit since, but still remain pretty high compared to the historical average. So both of those expense items are showing signs of stubbornness. They do go up and down, but they are remaining at historically high levels. And those are two line items of concern to farmers, but which they do have the ability to manage risk around. And Mark, you can probably speak a little bit more to how they can do that.
Yeah, so some of the strategies in terms of managing, I suppose, the cash situation on the farm, top of the mind right now is the situation down south, Southland and Otago, also West Coast. So they're very much going to have to manage their cash flow pretty sharply. A lot of the farmers I saw much higher than expected supplement feed costs and also production levels lower than forecast. So mission critical, having an up-to-date cash flow and very much monitoring budget versus actuals as you go through the rest of the season. You know, when you hear the word cash flow, it's another way of saying relationship with your financier and keeping in touch. Having been a banker, bankers don't like surprises. So that sort of communication is pretty key. One other thing, Jax, for other farmers, if they are in a strong situation in terms of cash surplus, what do they do with it? It's pretty sort of individual. Every farm situation is a bit different, but paying down debt when you can, and maybe some repairs and maintenance, catch up around that sort of stuff is pretty useful time to do that.
And what tools does DairyNZ have that can help farmers with budgeting monitoring?
There's a few things I'd say around that. Dairy Training Limited is a subsidiary of DairyNZ and offers free short courses. So there's some really good courses, business by the numbers, write a business plan, contract milking courses are some of them. They're excellent in terms of the financial budgeting and planning. Have a look on the DairyNZ website for information around dairy training. And there's also some really good resources around financial budgeting, cash flows, and easy to find on the website as well.
Great, thanks, Mark. Now, Mark Storey, at the time of this recording, we've just had the second consecutive OCR cut in a row, which are the first cuts in just under 4.5 years. Further cuts to the OCR over the next 18 months are predicted. Assuming these happen, how soon do you think farmers will feel the benefits of this in terms of lower borrowing costs?
Yeah, no, that's the key question. So the most recent changes announced by the Reserve Bank last month, which saw the OCR come back to 4.75, is, as you would expect, positive for farmers, as they will begin to have more discretionary cash available to spend this season. So that will start to flow through towards the back end of the season, although it will take a while. It's effectively when those effective costs of borrowing start to adjust, and if they're on floating rates, those floating rates start to come down, or if on the fixed rates, they move from fixed rates onto new fixed rates, etc. So the same as, I guess, all people, all households in the economy are sort of waiting a while for that to kick in. We are expecting to see some improved cash flows for farmers this season, especially towards the end of it. It will all depend on, to some extent, whether there'll be further adjustments announced and the magnitude of those. The real benefit will start to be seen next season as those rate cuts start to flow through. And I guess what farmers will be watching out for of interest for next season is whether the Reserve Bank will be making further announcements in November and the magnitude of those cuts. So everyone's sort of like waiting on that to see what flows through. So in short, yes, it's positive for this season, but we won't really see the benefits of those until the season after.
And Mark Speight, looking to the production side of the ledger, what sort of season are farmers having so far compared to previous seasons?
The Southland situation has been a tougher one. Broadly, across New Zealand, season to date for 24-25, we're about 6.5% higher compared to the year before. And September month production was about 5.2% higher. So overall, it's shaping to be a pretty good season, apart from those regions down south. It's been a pretty strong start in the Upper North Island. I was talking to a friend in Northland. They had a really challenging season last year, coming out of the spring, and they've got off to a flyer this year and are shutting paddocks for silage and making silage. So they're looking pretty good. Some parts of the lower North Island, interestingly, are getting a bit dry. All this sort of talk of challenges down south. But yeah, I know in Taranaki and parts of the Wairarapa, it's getting a little bit dry. Canterbury's had a solid start and is looking in pretty good shape.
We've just come through calving and we're starting mating. Is there anything there that's of note so far?
with the situation in Southland, this has been really testing. They're coming into mating over the next couple of weeks. And it's been particularly challenging in terms of a high level of supplements that have been fed, and then you're at a very delicate stage before the grass actually takes off. So some of the decisions down south in terms of changing over out of a high supplement situation with really wet paddocks to obviously making the most of the pasture when it really does take off. So, the other parts of the country, I think cows are cycling pretty well, and the feed situation, growth rates are on the whole pretty good, Jack.
Extreme weather events have impacted farmers in some form or another across the country in the past few seasons, including this, as you talked about. Mark Speight, how can farmers build more resilience into their farm systems to manage these extreme climate conditions?
Look, I think the debt levels are probably a key thing in terms of coping with extreme events. It's a hell of a lot harder if you're in a high debt situation when suddenly you have to cope with extreme events like Cyclone Gabriel, droughts, or a prolonged wet period. So when you can reduce debt levels, such as like when the payout was high 21-22 season, you're in a position to buy extra supplements and work through those realities when the chips are down. So, and just having some cash reserves for those pinch periods can be a real saviour. And a similar approach, okay, that's the financial side. Having feed in reserve, so harvesting supplements during the spring can be critical for a dry summer period. Hey, one thing I'd certainly say is making use of both, sort of feed budgeting and financial budgeting tools. One farmer that I've worked with a lot, who often coasts pretty close to the line, has both those programs permanently open on his computer. So he's continually adjusting, planning in terms of the feed, supplement situation, and in terms of the financial situation. So that front foots a whole lot of the decisions in terms of where the cows are at, pasture, and your financial situation.
Having those things open and looking at them often sounds pretty smart. We always hear that what makes a difference is when you make the decision rather than the decision that you make. So, regularly reviewing means that you make the right decision at the right time, not 2 weeks too late.
I never forget Kevin McDonald saying, what was the thing that stood out about New Zealand farmers? And Kevin McDonald was one of our senior scientists and very clued into farm systems. But in terms of his advice, it was very much New Zealand farmers are on the ball. They've got their finger on the pulse in terms of the farm business, and they're making decisions as you go along.
Okay, Mark Storey. With international commodity prices and input costs shifting rapidly, what should dairy farmers be watching on the global stage that could impact their operation next season?
Yeah, there is so much going on in the geopolitical scene which captures the attention, and things to watch out for in coming months, if not weeks. The big one, I guess, which is front of mind for many people, is the US federal election coming up in just over a couple of weeks now. So that will be interesting to see how that plays out. Possibly issues around threats of trade sanctions or changes to trade policy, at least vis-a-vis the US and some of their major partners. What that could have through in terms of flow-through impacts on New Zealand, we'd wait and see. At the same time, there are major ongoing conflicts in certain parts of the world besides, the tragic implications for those people directly involved. There's obviously sort of secondary risks for the New Zealand economy associated with energy prices and any disruptions to global trade and shipping routes, etc. So we continue to watch those. In particular, the longer they're drawn out, potential risks for escalation. So as always, it seems now the geopolitical scene is pretty hard to predict. Pretty interesting from some perspectives, but there's a lot that's going on, and it's almost like any forecast that you're taking into consideration. I guess this would be one of my major points. Even things like interest rates, where it's assumed they will continue to come down, we're only one global shock away from that not being the case. It's the same thing in terms of the impacts in terms of dairy prices or fuel prices, which could flow through to fertilizer prices, etc. You can only plan on what's in front of you, and everyone needs to sort of plan on the fact that we're only one shock away from a forecast looking quite different. However, you can kind of get lost in that volatility as well and a bit depressed by it. And I think the overall messaging that, dairy has come through the last few years of volatility pretty well compared to other sectors. The demand and supply for dairy appears to be in reasonably good balance. Some of those concerns we had about demand coming out of China appear to have improved. So the Chinese demand is looking stable. And so overall, the outlook for the dairy commodities market is pretty good, and that's been reflected in some fairly consistent results at the global dairy trade auctions in recent weeks. So you can only look at as far as you can look out, but dairy, I think, and the demand for dairy is in a pretty good place, but it's existing in a very volatile situation.
And from a financial perspective, what are farmers doing to spread or minimise some of that risk with success?
Well, there's a lot they can do, and there's various tools. We often talk in this context about decisions being driven by the individual risk appetites of farmers. So that varies from farmer to farmer, and we're being careful to stress that we're not giving financial advice as such on this podcast. But one relevant example of a financial tool which farmers do use to manage that risk are futures contracts, where a farmer can lock in the price for all or a portion of their milk production for the season ahead. So that gives you some certainty around what that price level will be. It's a discussion that often rears its head or potentially looks more attractive when prices appear to be strong, as they are relatively at the moment. However, just stressing that choices around those products very much depend on the individual farm, your appetite for risk, your exposure to it, etc. And they're similar to decisions around whether or not to repay principal on your loans, whether or not to fix your loans or to continue with floating, etc. And that's a discussion that should be had with your financial advisors. But there are a myriad of tools there to hedge risk available to farmers, and they are getting increasingly good at using them.
Thank you. And as we've already discussed earlier, there's even tools to manage the risk without hedging, I suppose. Mark Speight talked about the Dairy Training Limited free short courses and the tools on the DairyNZ website that can help farmers with budgeting and the like. So, Mark Speight, what could different farm systems do to make the most out of this economic lift to future-proof themselves so they become more resilient and profitable in the long run?
The first thing I'd say, whatever your farm system, you can be profitable. There's no sort of silver bullet saying one farm system is better than others. And a lot of that comes down to the location of the farm, season, and the managerial skills of the team on farm. So I'd go back to the point in terms of if you can reduce debt levels, do so, and that'll help with some of the payout fluctuations, climatic stuff. And again, monitoring both the feed and financial situation as you go through the season. There's some pretty good things available, new tech available now, wearables that can help with monitoring that situation. And the final point I would certainly say, so much of the farm system comes down to the team on farm. So communication channels and just making sure that team's happy, everybody's, I suppose, on the same wavelength in terms of getting through some of those challenges.
Thank you. Now, before I do my wrap-up, is there anything you think we've missed that you thought you might talk about and you haven't?
For those farmers that are in a positive cash situation and are looking at some possible infrastructure investment, that could well be worthwhile, especially around some of the climatic realities and volatility. I suppose my advice around infrastructure investment is for it not to be a knee-jerk reaction. It's tempting with the Southland and Otago situation for farmers, for instance, say looking at a feed pad. You've just come through one of the most difficult seasons in the past 10 years. You may not have actually needed a feed pad previously. So I think that sort of thing, you've got to think through the realities of it, particularly around financing the investment, and do the due diligence around consents and work with your rural professionals. So my final question around that, Jack, would be, is this investment that's going to give you some more debt, is it going to be a worthwhile investment for your farm system?
Thank you, Mark. So that's a wrap for today's episode of Talking Dairy. We've heard some valuable insights from both Mark Storey and Mark Speight about the challenges and opportunities facing farmers this season. As Mark Storey pointed out, there are positive signs on the horizon with higher milk price forecasts and lower interest rates, which could signal relief for farmers, but just pointing out that they are forecasts. However, Mark Speight's reminder that input costs are still high means that staying vigilant about your cash flow and making smart financial decisions is key. Whether it's paying down debt, investing in your farm infrastructure, or simply managing your costs more efficiently, it's about finding balance. There's no one-size-fits-all solution, but as both Marks mentioned, building resilience into your farm system is more important than ever, especially with unpredictable weather and global economic shifts. Remember, you can access budgeting tools from DairyNZ online to help guide your planning for the season ahead, and we'll link those resources in the show notes. Thanks for joining us today, and a big thanks to Mark Storey and Mark Speight for their time. Thank you for listening, and we'll see you next time on Talking Dairy. Mā te wā, mauri ora. Thanks for tuning into this episode of Talking Dairy. Make sure to hit follow so you can keep up to date with our latest episodes. You can also keep up with DairyNZ News on Facebook, Instagram and LinkedIn, or go to our website and sign up for our fortnightly DairyNZ News emails. As always, if you have any feedback on this podcast or have some ideas for future topics or guests to have on the show, please email us at talkingdairy@dairynz.co.nz. Mā te wā, mauri ora, catch you next time.